Mortgage rates stay steady, but the market is quietly shifting in ways smart buyers and investors need to know. Hey there, I'm Dan Artis, and this is your weekly market update for July 11th, 2025. Now, while it was a quieter week, we got some key insights from the Fed, unemployment data, appreciation trends, and a powerful new bill that just passed with major tax benefits. So let's start with the Fed. Minutes from their June meeting showed members still disagree on when to begin cutting rates. So for now, they're keeping the Fed funds rate unchanged, trying to balance stable prices with strong employment. And just a reminder, the Fed funds rate doesn't actually control mortgage rates, but it does influence the overall rate environment. So where are we now? As of this week, Zillow reports average mortgage rates at around 6.6% for a 30-year fixed conventional loan and about 5.99% for a 15-year fixed. I'm also seeing FHA rates around 6.125% or so. Now, markets still expect a Fed funds rate cut in September, but most Fed officials are anticipating 2 cuts by the end of the year. But under the surface, the job market is showing signs of softening. Continuing jobless claims have now been above 1.9 million for 7 straight weeks, suggesting that hiring isn't keeping up with the number of people looking for a job. Now, let's talk about housing. According to Cotality and the Intercontinental Exchange, home values in May were up nearly 2% from this time last year. Even better, Cotality is projecting over 4% appreciation in the year ahead. So, if you're buying a $500,000 home today, you could gain $20,000 in equity over the next year. And that right there, my friends, is a great reason why homeownership remains one of the smartest long-term investments out there. Now, let's talk about the big, beautiful bill that just passed. This includes 2 huge wins that you should know about. First, for real estate investors, you can now write off 100% of qualifying property improvements in the same year that you spent the money. That means stronger cash flow, lower taxable income, and more freedom to reinvest your money sooner. It's a real shift in how investors scale their portfolios. Second, for home buyers, PMI or private mortgage insurance is now permanently tax deductible. So, if you're buying with less than 20% down, PMI is no longer just a sunk cost. It could actually help you at tax time now. That's a major win for affordability and could make buying sooner a lot more realistic for people. So, whether you're an investor looking to expand or a buyer trying to make the right move this summer, there are real opportunities right now if you plan smart. If you have questions or want to just strategize, reach out. I'm here to help answer your questions with honest answers and would love to help you. Stay cool out there, everyone. I'll be in the pool all weekend.